Hello everyone, I welcome you all in our today's video. Have you ever wondered why investing is so much important? Why we need to invest our hard-earned money which is sitting ideally in a bank? So let's dive into it. So investing is acquiring any asset with the purpose to have a future income or for appreciation. Here the purpose is not to consume the goods, rather to create future wealth. When we talk about investment, we typically talk about two kinds of asset classes. Number one, financial asset classes, which includes stocks, bonds, government securities. And number two, real asset classes, which includes lands, house, golds, diamonds, etc. So in today's video, we are going to focus on stocks, a financial asset. So the question here is, what are stocks? So stocks is a securities which represents a part or ownership in any organization or a company. For example, a company has floated 100 stocks in a market and you have bought 10 shares of that particular company, which means you have 10% ownership of that particular organization or a company. Investing in stock market is a worldwide practice. In USA, more than 55% of the household invest in stock market. In UK, more than 33% of the household invest in stock market. In China, more than 13% household invest in stock market. However, in India, only 3 to 4% of the household invest in stock market. This disparity is largely because of they have a fear of losing money in the stock market or they lack the financial knowledge. But does investing in stock can create wealth for you or for anybody? Let's see. Well, if you bought a share of some good companies and if the company is able to do well in the market, you are most likely to make money. And if the company do not perform well in the market, you may lose money. This is where the concept of risk to return trade-off comes in. The higher the risk, the higher the return. The lower the risk, the lower the return. To manage this kind of risk, investor has and tools or method that we call diversification. In diversification, we try to invest our money in different asset classes which are not correlated. In simple words, we can say that don't put all your eggs in one basket. Now, why investing is so important? Investing helps us meet our financial goals, be it buying a house, car, or funding your foreign tours, child education, or the most important one, funding your retirement. Because once you retire, you no longer will have your regular income. To maintain your lifestyle, you need sufficient corpus. For example, if you need 10 lakhs per year currently, considering inflation by the time you retire at 60, you will need 57 lakhs per annum to meet your requirement or an lump sum of 3.2 crores. And if your retirement requirement are doubled as per your current requirement, you need double of the amount. To wrap it up, investment is not just about making money, rather it is about securing your future, achieving your financial goals and ensuring you have a comfortable retirement. Remember the key concept of risk to return trade-off and the concept of diversification and make informed investment decision. Remember, every financial decision that you are going to take today will impact your future. So take decision wisely and invest for long term. That's all for today. If you like this video, please give thumbs up and for more such content, please subscribe to my channel.